Everyone, Steve Fernandez here with this week's edition of Market Insights. Ian King is in the studio today recording a crypto presentation. Apparently it's pretty good, so you're not going to want to miss that. Stay tuned for it in the coming weeks. And today I want to talk to you about some news about Tesla, specifically Elon Musk painting some color about this $25,000 vehicle that apparently is on the horizon in the next couple of years. So before we get started, please give us some support for our channel. Go ahead and hit the like button and subscribe and leave a comment if you want to ask a question or if you like what we have to say. It really helps us grow our channel and grow our brand. So as I mentioned, Elon Musk gave us some information about this $25,000 vehicle that Tesla plans on producing in the next couple of years. There was a rumor going around last month that Tesla was going to be producing this vehicle in a China gigafactory. There was even like concept car photo dropped to the public, and it was really resembling a hatchback. So Elon Musk put 2023 as the year that he expects this vehicle to go into production. Some people are calling it the Model 2. I'm not sure if that name's going to stick, but we'll just call it the Model 2 for now. The cool thing about the Model 2 is that there is not going to be a steering wheel or pedals. So that means that this full self-driving feature really has to be the real deal if Elon Musk thinks that this is doable in the next couple of years. So at $25,000, that's a pretty remarkable price considering if you were to go out and buy full self-driving functionality now, which is likely not as sophisticated as it will be, that would cost you $10,000. So pretty remarkable when you think about the price point that Tesla is targeting. Now, I think that this is going to force other EV automakers to really bring down their prices on new vehicles. So I expect to see that as well in the coming years. Otherwise, it's just logical that Tesla will really go far with the market share gain here. Now, with new vehicles right now, and this isn't electric vehicles, this is new vehicles in general, costing $40,000, a $25,000 vehicle in 2023 would really confirm the thesis that a lot of industry experts are providing, that gas-powered vehicles will be more expensive than electric vehicles in 2023. So Elon Musk's commentary kind of confirms that idea. And what is this going to do for consumers and what is this going to do for investors? Well, according to a CarGurus survey that I was reading from March of this year, 71% of people are expecting to buy an EV in the future. So I think that'll be closer to 100% when they don't have a choice. But what that tells you is that people are open-minded to buying an EV. But what I saw as well was that over half of these people that want to buy an EV, cost is going to be a big consideration in that purchasing decision. In addition, they are caring about the accessibility of public charging. So those are the two things that are really the gripes right now for going out and buying an electric vehicle. And obviously, if you hadn't seen it, Biden has set aside a big chunk of change to build up the EV infrastructure in the US. He wants to have 500,000 vehicle chargers, public vehicle chargers. And you put aside $7.5 billion to get that done. So we'll see how that goes. But that kind of takes away the gripe that there won't be enough public charging out there. Now, with cheaper vehicles, I expect that these people that do want to buy EVs, they'll likely move up their decision to buy an electric vehicle, and that will happen sooner than it would have before. So the average total ownership period, I looked this up, for a vehicle in general is about 8 years. So if you think about 9 years left in this decade, we're going to see a lot of people buy a new vehicle, and that will be electric in that time frame. So with about 4.75% of new vehicle sales electric right now, I expect that to be closer to 6 by the end of the year and easily over 50% by the end of the decade, conservatively speaking. So for investors, I think the best way to play this is not necessarily the auto manufacturers, especially if the prices are going to be lower. I mean, that could hurt their margins, especially for the people that are trying to compete with Tesla. They lower their retail price without really offsetting too much of their costs. It's going to hurt their bottom line. I think that the pick and shovel or the supplier companies are really the companies you want to target with your money. So for example, semiconductors are one angle that you could play. Metals are another, specifically EV metals. And if you look at this chart, you can see that metals and semiconductors have really rallied substantially over the last couple of years. So I expect that move to continue in the future as well. And I actually really like metals over semiconductors, and there's a couple of reasons for that. So first of all, semiconductor production, there is a shortage right now that's expected likely to continue into next year. But it's a lot easier for US companies to produce semiconductors. About 50% of global production of semiconductors is from US companies. If you compare that to like metal production or metal mining, it doesn't even compare. Most of metal mining is done globally. For example, the top 5 metal miners are all international companies. They're not US companies. So from a supply standpoint, it's a lot easier for a US company to supply, and that shortage will likely resolve itself over the coming months, coming years. With metals and commodities, it's not that easy. So it's a lot harder for a company to put up a mine or get more resources from the ground, which are finite, as opposed to say silicon, which is used in semiconductors, which you can almost get out of thin air. It's one of the most abundant elements on Earth. So what amplifies that supply shortage problem is the concentration of production in international companies. So if the US wants to separate themselves from the world in terms of the supply chain, I think everyone can agree that it's in the US's best interest to supply some of these things themselves, as opposed to being at the liberty of other companies. If for some reason other companies want to limit supply, or if they're unable to meet demand, well, the US shouldn't have to pay the price there. So this is providing a US producer a real big opportunity to step in and fill the gap for US mining. Now, in Strategic Fortunes and New Era Fortunes, which are a couple of newsletters that Ian King and I research stocks and recommend stocks in, we do have a lot of attention on these mining companies. So we do have a link in the description that you can check out. It's a presentation on a rare earth metal producer. Just an aside, China right now accounts for 85% of the rare earth metal production, and it's really in the US's best interest to bring some of that production back onto home soil. So you don't want to miss that presentation. Go ahead and give it a look. But until next week, thanks for tuning in, and talk to you next time.